Thank you all for joining me today. I'm happy to speak with you. Just to give an overview of this, I'm going to assume that most of you are either starting out businesses, maybe as sole proprietorships, or thinking about it, or maybe you already have a business going, but I'm just going to go through the various types of entities and go through actually how to organize them if you're thinking about doing them, and talk about tax implications and liability protection and advertising. I'm just going to touch on all of this and look forward to our question and answer session at the end. Okay, and I'll try to go as slowly as possible. I tend to speak quickly. Okay, so this is just what we're going to cover. So I'd like to just talk briefly about C corporations so that you know the difference between a C corporation and an S corporation, and then we'll move on to talking about limited liability companies. You don't often see a C corporation for a small business, and that's because it's largely for tax reasons. C corporations are double taxed. You get taxed at the corporate level for profits at the corporate level, and then you get taxed on dividends paid to you. So you're paying tax twice, and that is not attractive. So what I like to see, and what most people will recommend, is an S corporation. Those are pass-through entities. So that means that the business does not pay income tax itself, that all of its profits and losses and incomes and credits and deductions pass directly through to the shareholders on their personal returns. And that happens by way of what's known as a K-1. So if you own shares in a company, you'll get a K-1 at the end of the year that tells you what to report on your personal tax return. Okay. S corporations can have up to 175 shareholders. So they can tend to be quite large, or they can have one shareholder. The biggest reason to incorporate is for liability protection. So there's something known as piercing the corporate veil. If you are not running your corporation properly, a court, and someone sues you, a court can look at this, see that you're not running it properly, and pierce the corporate veil. And when they do that, they go through the corporation and can get access to your personal assets. Having a well-run corporation protects you from that, so that if someone sues you, they can only look to the assets of the corporation to recover. We can talk more about that in question and answer, but I hope that makes sense for the moment. Even if you have a corporation, you really need to have insurance as well. So it's not an absolute way of protecting yourself. You should have director and officer insurance so that the actions of the directors, officers, and shareholders are also insured in addition to the liability umbrella that the corporation provides. Okay. Limited liability companies. They are also a pass-through entity for taxation purposes. They're taxed as partnerships unless you elect to be taxed as a S corporation. S corporation reporting is simpler than partnership reporting. That's why you might opt to do that. Limited liability companies have, instead of shareholders in a corporation, they have members and can be managed by a particular person. We'll get to that coming up. You can have an unlimited number of members in an LLC, or you can have just one. They are easier to organize. You don't have to go through some of the steps that we're going to discuss in a minute. So people find them attractive for that reason. I tend to prefer S corporations over LLC. They're a little more labor intensive to organize, but I think their liability protection, the history, the precedent in the courts is stronger than that for an LLC. I see someone taking notes, so I'm pausing to let her do that. LLCs are particularly excellent for holding real estate. Just as a note, so if you have a business that is renting out properties or doing anything like that, holding a real property, you would not want to have that in an S corporation. You would definitely want to have it in an LLC. And that the name of the game there is the liability protection, because even if you insure it, which you should, if someone falls down in a rental real estate property and gets a traumatic brain injury, you want to be protected from that. Okay, I hope that makes sense. So moving on, we're going to go into the specifics of organizing an S corporation. The first thing you want to do is file articles of incorporation with the Secretary of State. And before you file, first of all, you have to think of a name for your corporation. And then you can check online to see if that name is already being used in the state of California. You just go to the Secretary of State's website. The person organizing, and by that I mean filing the articles of incorporation, should sign a document called an action by incorporator that says that they're on behalf of the shareholders organizing this corporation and accepting the bylaws of the corporation. Bylaws govern the corporation. They're the rules by which they operate. They are long documents, very detailed as to who owns shares, how shares get voted, how the board of directors runs, what their positions are, any indemnification of directors and officers. It includes just about everything regarding the running of the corporation. So, like I said, they can be long, complex documents. You can look on the internet and find sample bylaws, but they are inevitably too simple and don't cover all of the situations that you would want to cover. So, and my advice is always to consult with an attorney when you get to the bylaw stage. You also need to have first minutes, and those are, you have annual minutes for S corporations, but you need to do first minutes, and those cover banking authority, who can sign checks on behalf of the corporation, whether you're making the S corp election with the IRS, what the principal place of business is for the corporation, tax reporting, what the tax year is, fiscal or calendar, covers all that. And when you go to open a bank account, the bank is going to want to see that document, the articles of incorporation, and the statement of information, which I'm going to discuss in a second. Next, you need to apply for a tax identification number for the corporation. So you can do that online at irs.gov. And it's fairly simple to do, and you get an immediate tax ID number letter online. The next thing to do is to opt to be taxed as an S corporation. And for that, you need to file Form 2553 with the IRS. And that tells them that, yes, you're a corporation, but you're opting to be treated as an S corporation. And the president signs that document. And it also lists all of the shareholders. And each of the shareholders must also sign that document. If you don't submit that form, the IRS will treat you as a C corporation. And like I said, that is not an attractive option. The next stage of forming the S corporation is filing a statement of information with the Secretary of State. That tells them who the owners and directors of the corporation are: president, treasurer, secretary, tells them who the officers are, tells them, most importantly, who your agent for service of process is. That agent is the person who gets served if you get sued. And so the Secretary of State wants that information out there so that anybody, any member of the public can look up and find that name and address. And it has to be an individual. Usually you can hire a corporation to do it for you, but the large preference is that agents for service of process be individuals. If you're forming an S corporation and you're issuing stock, which you are, you need to file a exemption notice with the Department of Financial Protection and Innovation, which says it's a securities exemption filing. So normally when you issue securities, if you're a big corporation, for example, you have to register with the SEC and the state organization. In the case of an S corporation with very few shareholders, you're exempt from that sort of registration under the Securities Act, but you have to file this form in order to be exempted from it. So you're telling them that you're issuing shares in a corporation, but it's not something that you would have to do a formal registration for. Next issue is whether you're going to have employees. If you are going to have employees, you need to register with the Employment Development Department, EDD, so that they can keep track of and you can pay payroll taxes. Here's the thing with S corporations that's so attractive. When you have an S corporation, you can be an employee of that corporation, and you should be. You pay yourself a fair market value salary as an employee of the corporation, but then you can take the remainder of your profit as what's called a distribution or dividend. So your payroll is subject to employment tax, but your dividends or distributions are not, and it saves you 15% right there. So it's a way of saving money and increasing your income. Dividends are taxed at a lower rate than personal income. So it saves you money that way as well. The last thing you need to do is issue share certificates for each of the shareholders. Even if you're just one person, you get a share certificate. That's pretty simple to do. You can get corporate binders and share certificates from any legal document service. I have ones that I can recommend. And then shareholders agreements. Sometimes people come to me and they say, we have a partner, we want to form a corporation, and we want to be 50-50. Well, that can be difficult if you don't agree as to a corporate matter. So in that situation, I recommend doing a 51-49 split, so you have a tiebreaker for the person who owns the majority of shares. But if you insist on doing a 50-50 split, I recommend a shareholders agreement. And that can say who gets the ultimate decision with regard to corporate matters. If the shareholders start not getting along as to the conduct of business and one wants out, the shareholders agreement can govern how that happens. Who gets bought out, how they get paid. And there are also other situations in which there were mandatory buyouts of shareholders. For instance, if one of them dies, their estate would get paid for their shares. If one goes into bankruptcy, the other shareholder has the option to buy their shares so that they're not subject to the bankruptcy court. Overall, the agreement is to make clear what powers each of the shareholders has. Okay. Limited liability company organizations. Very like S Corp organization. You need to start off filing articles of organization, not incorporation, but organization with the Secretary of State. And you should check the name before you file articles to make sure that no one else is using the name. And then with LLCs, the equivalent of the bylaws in a corporation is the operating agreement in the LLC. And the operating agreement governs how the LLC runs. It names who the manager is. With LLCs, you can have manager-managed companies or member-managed companies. The members are the owners. So they can say, if it's member-managed, everyone has a say in the conduct of corporate affairs. If it's manager-managed, the members are appointing someone to run the LLC. The operating agreement, again, goes over voting, ownership, principal place of business, officers, president, CFO, secretary, buyouts, indemnification of members and managers. And so on and so on. We can get into that more in the question and answer session if you have questions about it. LLCs also need first minutes. And the most important part of that is the banking authorization. So they go over company name, principal place of business, banking authority, whether you're going to make an election to be taxed as an S corporation. Electing calendar or fiscal year. And that's about all they cover for LLC. You're going to need to go online with the IRS and get a tax identification number. And then make that tax election. If you want to be taxed as an S corporation rather than a partnership, you file Form 8832 with the IRS. And that lets them know that you're going to be filing an S corporate tax return. And then again, if you're going to have employees, you're going to want to register with the EDD. And if you're going to be working for the LLC and taking a salary from the LLC, you need to register with the Employment Development Department. Okay. I'm getting through this very quickly. I hope you have questions at the end. Annual maintenance, and this applies to both S corporations and LLCs. You need to file statements of information with the Secretary of State, just like you did right when you organized it, but annually for corporations and every 2 years for LLCs. And that again is making them know who the directors or members are, the agent for service of process in the event that you get sued, and all of the members in the case of an LLC, and all of the directors in the case of a corporation. For each type of entity, you're also obligated to take annual minutes. So for a corporation, the shareholders meet annually and they elect the directors of the corporation. The directors meet right after that and appoint the officers of the corporation. That's the most basic thing that you can do in annual minutes, but you can also document major corporate purchases that are authorized, employee benefit plans that need to be authorized by the directors and or the shareholders, depending on the size of the corporation. You can authorize and discuss anything that you want to in the annual minutes. So that can be anything financial. You can authorize the hiring of an attorney or a CPA. Just about anything that you want to mention in annual minutes, you can, but the bare bones is the shareholders appointing the directors and the directors appointing the officers and authorizing them to take all corporate action. Finally, tax returns. You obviously have to file a tax return every year with the Internal Revenue Service and the Franchise Tax Board in California. So, like I said before, you will receive a K-1, whether you have an S corporation or an LLC, and you'll turn around and file that with your personal return. And what corporations and LLCs do, because they're pass-through entities, is they file a zero return. So that means that they are listing all of their income and deductions, but they are not paying tax themselves. That passes through to the individuals. I hope that makes sense. In addition, the California Franchise Tax Board will charge $800 per year for the privilege of having a corporation or an LLC in the state. So what you'll do is, with the tax return for California, you'll write a check for $800 and that'll be what you owe. So I don't want you to think that you're not going to have to pay anything with your state return. You will. Okay. Some financial notes just about running the corporation in general. You must have separate bank accounts for the business. You cannot commingle funds. That's one of the things that the court would look at to pierce the corporate veil, as we discussed before, and destroy your liability protection that you have by having an entity in the first place. So keep it separate. As soon as you organize your corporation or LLC, go to the bank with the documents that they're going to want to see. And again, those are articles, the first minutes that authorize the banking transactions, your tax ID number, and your statement of information that you filed with the Secretary of State. Those are the 4 documents that they're going to want to see. As for bookkeeping, I highly recommend hiring someone to do it. Unless you're a whiz with QuickBooks, a bookkeeper and a CPA are invaluable to you. You can spend a lot of time trying to do those things for yourself, and you have to figure out how much your time is worth and whether that justifies hiring a professional, and in most cases it does. So something to think about there. Advertising. If you have a corporation or an LLC, you have to indicate that on all of your corporate documents. So that means checks, letterhead, contracts, and any advertising that you do. However, you can do what's known as a fictitious business name registration, more commonly referred to as a DBA, doing business as. And then you're able to use that in logos and advertising. However, your checks and letterhead and contracts should really say the proper corporate name. You can open an account using a DBA and have that on your checks, but the best practice is to use the actual corporate name in that instance. Now, logos and trademarks. If you have a logo and you're growing bigger and bigger and you want to protect that logo, you need to trademark it. And I don't do trademarks, so I don't honestly know too much about it. But if you want to trademark, contact a trademark attorney. And they can talk you through state registration versus federal registration, how much it costs, what it protects, all of that. Um, I think that's all I have to say. Does anybody have any questions? Or Gabrielle, do you want to come back?
Yes, I'm definitely here. Thank you. All right, if anyone has any questions, please feel free to unmute your mics and go ahead and address your questions.
I have a question. Thank
Sure.
you, Anne, for the information. So I have a business. I'm a coach, so I'm a sole proprietor.
Mhm.
I have done my fictitious business name already. It's finished. I've got a business bank account. I actually didn't need to provide several of the things that you said. I have set that up. I'm working on getting QuickBooks, and I will get a bookkeeper or bookkeeping help. So right now I don't have any income at the moment. I hope that's a very short-term thing.
Yeah.
And I don't own my house or have any real assets to speak of. What I'm wondering is, what is the threshold? I'm just keeping it sole proprietorship at the moment because I don't even want to pay the $800 or the $850 or whatever it is to
Right.
file the
Right.
LLC or the S Corp.
Mhm.
What do you suggest as the threshold for when I should file? And at that point, given my situation with no partners, no shares, no anything,
Mhm.
would you recommend still the S Corp over the LLC, or does that not make sense for this kind of situation?
Well, let me ask you, what sort of liability do you have as a coach?
At the moment, none, and many coaches don't,
Okay.
because we are not therapists, we are not consultants, we are not doing the kinds of work that people usually get sued for.
Okay. Then I think that you would continue to be fine as a sole proprietor. Do you have insurance?
No.
You may want to talk to somebody about getting an insurance policy on the business.
So when you say insurance for this purpose, what kind of insurance are you talking about?
It's just business insurance.
Business insurance. And what is that?
That just covers it's two kinds. One covers your place of business itself. I don't know if you're operating out of your house or you have an office.
I'm working out of my house, so
Okay, so you have homeowners insurance then to cover that.
I'm renting. I have renter's insurance. Yes.
Okay, so that's good. And the others, do you need to be registered with the state or anything like that as a coach?
No.
Okay, so I would, in your case, it's a little difficult because I don't think you actually do need to have insurance in your case. But if you were someone that would have any liability for anything, or if you owned real property, like I was saying with all the tenants, you want to insure against all hazards in essence.
Okay.
But I don't think anyone's going to come and sue you. Do you have a contract that you use with your clients?
I do.
Okay, and does that say that you're not to be held liable for anything?
Yes, it does. I need to get it looked at by an attorney, but
Okay,
it's a fairly standard coaching contract.
okay, sounds good. Did that answer your question?
Yeah, it sounds like this is not something I need to worry about at the moment, unless it's
At the moment, no. And I know you're probably looking for a financial threshold, perhaps, you know, after I'm making $100,000, there's no real threshold that I could tell you. It just depends on the type of business that you have.
Okay.
And I think that you probably don't need to incorporate or organize as an LLC.
Okay.
If you ever bring anybody into your practice as a co-owner, then you might want to think about it.
Okay. All right.
Then I would actually recommend it in that circumstance.
Sounds good. Thank you.
Okay, you're welcome. Anyone else?
Yes, we have a hand raised by Giselle.
Hi, thank you for your time. I wanted to ask, so for say someone like myself starting a business doesn't have it registered or anything yet. The business that I want to do is like freelancing.
The library will be closing in 28 minutes.
Freelancing.
Oh, yeah, I wasn't expecting that announcement.
Okay.
The library is closing in 20 minutes. Good to know.
Mhm.
Train of thought was sidetracked, but it's coming back to me.
You want to
If
do
I-
freelance work?
Freelance work, but it would be like digital, just mainly like digital content.
Mhm.
What would be like the best avenue for that? Like, will an LLC encompass copyright things?
No,
No? Okay.
no, unfortunately not. If you want to, well, give me an example.
So say I create something and another organization sees it and they just decide to use my idea without giving me credit or any like compensation whatsoever.
Okay, then you get into copyright law, which is different than corporate law. But
see.
the LLC doesn't do anything to necessarily protect you from that because you're the artist
Okay.
and you need the copyright protection. The LLC and the S corporation, they protect you from liability overall for things that your corporation or organization or you might do.
Okay. I have a
But-
follow-up question then
Sure.
with you said I'm the artist, which is true. So if
Mhm.
I say wanted to is it possible to like create myself as a business to be like kind of, you know, how there's artists who say for example Madonna,
Mhm,
her real name isn't Madonna but her artist name is Madonna,
mhm.
and under her artist name that's her business to make art, and that's how that's her business, being an artist, and Madonna's her brand. Is it possible to do something like that as an artist?
Well, like the previous questioner, I think it sounds like with you, it would be a sole proprietor.
Sole proprietor?
And that's what you would be running your business as, at least in the beginning. And you can do what she did and go down and register for a fictitious business name. And you can call yourself whatever you want to call yourself, Madonna, whoever it is, and then run it that way. But would you be doing work for various businesses? Is that how you envision it?
So honestly, I have like a few ideas. One of the ideas that I have in particular is like photography.
Mhm,
So I want to do like freelance photography.
mhm. Okay, then I recommend definitely a sole proprietorship to start out with. If you are going to go work for a company and do some work for them, make sure you have a contract with them and make sure that contract states that you're an independent contractor and not an employee of the corporation. And then they'll just pay you, and then you will declare the income on your personal tax return.
Also, is it okay? Will we be like forwarded an access link to review the slides?
I think I'm going to send them to Gabrielle and she's going to make them available.
Yes,
Awesome.
definitely.
Awesome.
Okay, great. Any other questions?
We do have a question in the chat box from Lynn Ann. She says, can you speak more about the pros and cons of an S Corp versus an LLC? She says, my situation is a retail store, brick and mortar and online with potentially 3 owners.
Okay. Corporations are more formal entities than LLCs. And like I said, for me, it comes down to the liability protection of each. And I think the body of law behind corporations is stronger than it is behind LLCs. If you're going to have 3 owners, I just always recommend an S Corp. Am I answering your question? You can type in more and let me know.
And Lynn Ann, you can also feel free to unmute your mic if you would like to add some additional clarification.
Yeah, can you hear me okay?
We sure
Yes.
can.
Okay, great. Yeah, I think I'm not sure what the liabilities are particularly. So I don't know what the risk is for a retail store. So it's hard to, when you say the liability, I'm not quite sure what kind of risk I'm taking.
Well, somebody could walk into your store and trip and hurt their head.
And so the process of them suing us as a S Corp would be different than as an LLC. And
I just think the law behind the S Corp is a little stronger than with the LLC. LLCs are newer entities than corporations.
Okay.
So you could do it either way. And like I said, you still need to have insurance, even if you have if you have a corporation or an LLC.
Okay. Now, you did also mention shareholders
Mhm.
voting for directors. Can you explain that again? I mean, if we have 3 owners, who
Mhm.
exactly are the shareholders? Who are the managers? What is that
Okay, so-
relationship like?
I getcha. So in a corporation, you have the shareholders, they're the owners, but then you have a board of directors as well. And under the board of directors, you have the officers of the corporation. So the president, the treasurer, the secretary. So the shareholders don't manage the day-to-day operations of the corporation. It's really the officers that do that. And the board of directors oversees the officers. So I know what you're saying. You have 3 people in your business, and presumably in that situation, you 3 would be the board of directors, and then you 3 would figure out who the president would be, who the treasurer would be, and who the secretary would be. Does that make sense?
Yes.
Okay. And then as far as members and managers go, I think you were asking that as well.
Mhm.
It's the same idea. You can either have a manager managed LLC or a member managed LLC. So if you appoint a manager to manage the LLC, they will function as the president.
Okay.
Okay.
And with each of these, I mean, if there's a board, say it's an S Corp
Mhm.
with a board of 3 owners, are they all equal?
It depends
Owners?
on with the board.
Yes.
It depends. So it's what it comes down to is how many shares you own.
Okay. So it could be even shares across all 3, or it could be uneven shares.
Yeah, and with 3, you don't want shares that are 33 1/3. So you might want to work out something that adds up to 100.
Okay. That helps.
Okay, great. Anyone else?
Again, everyone, feel comfortable to unmute those mics if you guys have any additional questions.
I see 4 items in chat, but I can't
yeah.
see them.
I was going to read it off to you.
Okay, sorry,
Okay.
Gabrielle.
Oh, no problem. It's quite all right. But we just had a few comments. So Rachel Radway had stated she needed to drop off and wanted to say many thanks to you for your time and your help. And then we have a comment from Giselle, who was just speaking. She said she has to hop off, but thank you all for your time, is what she said.
Very nice.
Yeah.
Any other questions?
I do have a question.
Oh, great.
Great.
So actually, my situation sounds a little similar to Lynn and I have my two others that are going to be, we're doing business together, although I'm going to be the majority. What we're planning right now is really a pop-up concept store as a test. So it's going to be a fairly short term, like less than a year. So we were thinking that we would postpone deciding to do some kind of corporation till after that time period, just to make sure that we actually want to continue all that. In the
I think that's a good idea.
yeah. Okay, so in the meantime, when I did the fictitious business names, it seemed like what fit was the general partnership one.
Mm,
So I did that. And then I talked to a CPA recently, and she's like, oh, that means you actually have some more stuff involved with taxes. So I'm wondering if that was the right thing to do, or if I need to approach it a little differently.
So are you saying when you applied for your DBA, you listed yourself as a general partnership?
Right, because there are technically three of us.
Okay, so that's an interesting question, and I know what your CPA is saying. It gets back into reporting as a partnership.
Mhm.
If you actually have a partnership, then you need to go through those stages of getting a tax ID number and filing returns and doing all of that. So for the time being, you may just want to have an agreement between the three of you that outlines that you're going to do a pop-up for a certain period of time, to see if your business is going to work, to see if the concept takes off. So what you could do is go back and retract that fictitious business statement, and get a DBA under your name.
And just as a sole proprietor.
Mhm.
Okay. That seems like it would be, I guess, a bit less complex in this stage.
Mhm. Yeah, because you want any profits that you get to go through each of your personal returns.
Right. Okay. I thought that's what I didn't really read up enough on the general partnership. So I thought that was basically like a sole prop, but with additional people. But apparently it's not.
Yeah, no, it's sort of, it's another kind of entity is what it is.
Okay.
Okay.
And then I guess the part for liability, because it is a store and all that, what we're looking at is just making sure that we have the right kind of insurance, like with general
Yes.
liability and professional liability.
Yes. And I'm not an insurance expert, so I just recommend contacting an insurance agent, telling them what you're going to do and seeing
Right.
what they recommend.
Yeah, we're working on that right now. Okay.
Okay, perfect.
you.
Well, good luck to you.
Thanks.
Okay.
Any other questions from anyone?
Hello,
Okay,
this is Rod. I definitely would like to get your contact information, Anne, because my business idea venture is going to be big. And
Okay.
I want to, before I get started, make sure that I get everything and my ducks and paperwork legally wise
Okay.
in order.
Okay.
And I would certainly like to continue this conversation with you.
Okay, well, that's wonderful. Well, I'm going to forward the slide presentation to Gabrielle for her to
Mhm.
distribute. And the first slide has all of my contact information on it.
Yeah, I missed that part. I didn't capture or took a picture of the screen.
That's okay. Can you still see my screen?
Yes.
Okay. There you go.
Wonderful. Thank you.
Thank you. I look forward to hearing from you and talking about it more.
Nice.
I always like to hear about big ideas.
And Rod, as Anne had mentioned, you all will also receive the presentation, so you'll also have that extra information too.
Okay.
Okay, so any other questions before we move to the close? Okay, I don't believe so. All right, well, I wanted to say thank you, Anne. We truly appreciate your time and your presentation. And for those of you who want more help with legal forms of organization, or if you want any additional advice on other subjects related to business, please contact us for no-cost one-on-one consulting with one of our experts. In addition, you all will receive a link to today's workshop, and for all of our previously recorded workshops and to view our upcoming events, please visit the Women's Business Center website for all of that information. So this brings us to the close of our workshop today. Thank you again, Anne, for sharing your expertise with us. And we here
Most
at the
welcome.
Women's Business, thank you. And we at the Women's Business Center wish all of you a wonderful evening. Thank you for joining us, and we hope to see you again real soon. Bye-bye, everyone.
Bye-bye.
And Anne, I'll reach out to you later, okay?
Okay, sounds good.
All right.
I'll
Okay,
email
bye-bye.
you now.
Thank you.
Okay,
Okay,
bye-bye.
bye-bye.